Good morning, ladies and gentlemen, and welcome to the Greatland Gold Investor presentation. Throughout this presentation, investors will be in listen-only mode. Questions are encouraged and can be submitted at any time using the Q&A tab situated on the right-hand corner of your screen. Just please simply type in your question and press send. The company may not be in a position, given the significant attendance today, to answer every question it receives during the meeting itself. However, the company will review all questions submitted today and publish responses where it's appropriate to do so. These will be available via your Investor Meet Company dashboard, and we will notify you by email when they are ready for your review. I'd also like to remind you that this presentation is being recorded. Before we begin, we would like to submit the following poll, and if you'd be so kind as to give that your attention, we and the company would be most grateful. And I'd now like to hand over to Sean Day, CEO from Greatland Gold. Good evening to you and good morning to everybody else.
Thanks, Mark, and welcome everyone. Thanks for taking the time to join us today. We'll give you an overview of the Havieron pre-feasibility study. Look, lots of turnout, a tremendous turnout. So what I'm going to try to do is get through the presentation inside of 30 minutes so we can really open it up for the Q&A. So yeah, look, with that, let's punch through the disclaimer and into the presentation. So look, this slide really just orientates us around something that you've hopefully all heard before, around our pillars of growth. You know, we want to expand Havieron, we want to deliver it on time, on budget, to the benefit of all Greatland shareholders, and it's a tremendous prize as our flagship asset. We're going to continue to accelerate our exploration. We want to invest in the drill bit, and we want to develop the value within the balance of the portfolio and create the next Havieron for our shareholders. And then finally, we also want to pursue opportunistic growth. We want to be disciplined managers of our asset portfolio and look for opportunities to bring value in when we can do so, and create, you know, the value for shareholders that we strive to deliver. Thanks. So on this slide, I really just want to talk about, this is really phase one, this pre-feasibility study. It's centered on the Southeast Crescent. Now that Southeast Crescent is a high-grade backbone to Havieron, but it's only a fraction of the Havieron asset. And indeed, this study is really just on a fraction of that Southeast Crescent. So you could describe this as a study on a fraction of a fraction of the ore body. Having said that, you know, I think it's a tremendous outcome and is really the entree into what is proceeding as the main course, which is really starting to measure up as a very high quality, world-class asset. And this gives us the opportunity to really unlock the whole value of the asset and gives us a bit of a citer about where that journey is going. And the next slide actually takes us through the journey. And I think the way I think about this is as a journey together. You know, we've commenced this, you know, we've started the decline early. The risk for Greatland in terms of partnering with a group like Newcrest is that they would want to sit back, drill this out like a pincushion, you know, do a huge amount of study and then develop this massive scale mine, which Havieron has the potential to be. But of course, we would have been sitting here for years and we would have had an absolute wall of capex ahead of us when we hit that point. Instead, it's being developed in this staged approach, which is really just tailor-made for a mid-cap balance sheet like Greatland. So what are we doing? We've started the decline early. We've punched down into towards the Southeast Crescent, and now we've got the study coming out, the initial stage one study, which really just unlocks this Southeast Crescent. And then in parallel with that, yep, we're going to continue to work up that Southeast Crescent and understand that better with the feasibility study in late next year. But also, as we drive down towards the top of the Havieron ore body, we create drill platforms that provide the opportunity to punch into that and increase the cycle time, reduce the cost of drilling out that bigger picture, understanding the northern breccia, the eastern breccia, that high grade northwest corridor that we're starting to see across Havieron, and really look at that broader bulk mining picture, which unlocks the full potential of Havieron. Look, this next slide tries to capture, that this is the tip of the iceberg, and then we've got the infographic details just on some of the key punchline numbers. To start with, this is only a fraction even of that existing resource, 14 million tonnes out of 52 million tonnes, so say 28%. But what it does is it delivers, even at that small size, it delivers significant free cash flow and an IRR of 27%. Now, there's two factors that have gone into delivering such a high IRR, even on what is a limited scale project in the context of the overall Havieron. And this first limited scale edition of Havieron has to carry all the capex of developing down that decline, getting in that underground declines to unlock ore body once you're even at the inside the mining shape. Also the road across to Havieron, to Telfer, and the power line back again. And all of that still only leaves a $73 million hurdle for Greatland to fund. And remember, we've already got 50 million funded, and that gives us runway out to probably the balance of end of next year, around this time next year, when we expect the feasibility study to be delivered. So it gives us 12 months of runway and $73 million to fund, which as a fraction of our market cap is very modest, and gives us plenty of time to approach that. And I'll talk about banks and other opportunities that we have there. And of course, the other side of this is that world-class cost structure. $643 an ounce. We'll focus on this through the presentation, but Greatland has the opportunity to be the second lowest cost gold producer on the planet. So that's extraordinary. So this slide, there's a couple of points to note here. Well, firstly being that today we have our maiden ore reserve. Previously, we've had the resource. Now with this study out and with the infill drilling, we have a reserve. What's really important about this is that this reserve has actually seen the metal content of those 14 million tonnes notch up. Normally, there's a risk that will fall away. But in this case, talking to the quality of the team, talking to the quality of the analysis that's been done, and the very leveraging the understanding of the Patterson that Newcrest, and great credit to Newcrest on this, that they have from 35 years. And that should give people confidence, not just about the resource and reserve number, but about all the values, all the figures that we use throughout this study. And look, in terms of trying to demonstrate what we're actually presenting today, I think a picture is often worth 1,000 words. And here you go. You can see that dark red color. That's actually an outline of the stopes under the sub-level open stoping. And what you can see in that balance of the pink is all southeast crescent, so high-grade material that sits outside of this mining case. So you can see the upside. And then again, when we look at that southeast crescent, we consistently drill it. We consistently get good grades. You're actually seeing some higher grades and higher widths at depth. And so far, it looks like it plunges down to the center of the earth. So, we're going to continue to follow it. It's an absolute prize. And really, even this study, focused on the southeast crescent as it is, doesn't capture the bulk of it. So, again, this tip of the iceberg, and we've got the cylinders on the side that hopefully kind of graphically represents, where we are today and how many of those, those cylinders potentially fit into the long-term size of this mine. This takes us to CapEx. And again, look, the low CapEx nature of this and low risk is exceptional. So overall, we've got this $123 million funding. We have 50 of that already through the Newcrest facility. So that leaves us with 73 million pounds. So what's that? $73 million US. So what's that? 50, 55 million sterling, which is a very modest value, particularly when you take into account that there's a contingency in this of $64 million. So I talked about the confidence that we have in delivering the outputs of this study. And again, I want to recognize the value that Newcrest delivers in that partnership. But we have a lot of confidence of delivering that. And with those contingencies in there as well, it gives us a lot, I think everyone should take a lot of confidence there. And importantly, again, we have this 12 months of runway with the funding facility from Newcrest. And then we can continue to pursue that over time and think about how to draw down the rest of those funds through a combination, particularly of debt that we're currently looking at. This slide really just talks to the brownfield nature of Havieron. We get to leverage the existing Telfer mine infrastructure. And that's not just the processing plant. There's the workshops, there's the camp, there's the stores, there's the critical spares, there's the bitumen airstrip, all in place. And all of that we get to utilize to create this low risk, low capex startup of Havieron. It's also worth noting there that the discovery hole HAV5 was drilled in 2019, and the results came back from that in 2019. It's just 2021 today, and already, we're a long way down the track to this actually being an operating mine. So it just shows you the benefit of this, having Newcrest as a partner and having this infrastructure to leverage off. And I've talked a lot about the physical infrastructure there, but the people infrastructure of around 1,200 people in situ at Telfer, collectively with 35 years of mining experience in the Paterson, again, gives this great value, great insights on the cost, great understanding of the geology, of the processing. All of that we get to utilize and leverage to deliver Havieron in a low risk and confident way. This next slide just looks at this, starter mine production. And you can see, again, one of the things that really jumps out on this page is that grade. 4.58 grams per tonne gold equivalent. That is a spectacular grade and drives so much of the quality of this outcome. And again, hopefully it comes across. But although today's presentation is around this 2 million tonne per annum mine, what you actually have been taken to the feasibility study is actually a 3 million tonne per annum case. So that's 50% growth just centered on this southeast crescent, which I think starts to give you an insight as to the ambition that the joint venture partners have for Havieron. And in addition to that, we'll talk about the bulk case later. But this very special part of the mine, this higher grade southeast crescent, this start of the mine, does carry this tremendous grade. And then we deliver this growth with a much larger, feasibility study assumption that, subject to ongoing drilling and everything, we think will hang together well. Now we get into a couple of great slides here, which talk to the cost of Havieron. You see there, we sit there well and truly in the lowest quartile. And what does that deliver you? Margin. Fantastic margin per ounce produced. There's not many mines sitting there to the left of screen as we look at it. But the ones that do sit there are absolute bellwethers of the sector. So Havieron sits in tremendous company there, and we sit there in the lowest quartiles of our peer group. So a really handsome slide there when you're looking at plus 1775 gold and a cost of 643 an ounce. $1,000 plus margin per ounce is special, and we should really appreciate that for what it is. The second slide here under cost, this is potentially my favorite slide in the deck, and I've just got to recognize the Chris Toon, the CFO for us, who actually got the kit code data on this. It was a great initiative, and just sits there where Greatland is positioned on as a company, all-in sustaining cost, second globally. Which is worth pausing on, that we would be the second lowest cost gold mine on the planet. That is a tremendous outcome. And I think what's more is that, there is this potential to actually walk down the cost structure, looking at higher, different mining methodologies, even within the Southeast Crescent as part of the next study, adding bulk to the mine and getting that scale. And then importantly, one of the assumptions in the pre-feasibility study is no other ore is going through the Telfer plant. That's a 20 million tonne per annum nameplate facility, and this study assumes 2 million tonnes going through it. So clearly, as we increase the size of the Southeast Crescent, as we look at the balance of that zonation, look at bulk mining across there's an opportunity to share that cost, those fixed costs and overheads of Telfer across a bigger ore body. Plus, for those following Newcrest, Newcrest identifies that they're really focused on adding mine life to Telfer. So, given the history of Telfer, I think that's highly probable. And so when you look at that, you can see this downside risk, because we're just using Train B of that Havieron processing facility. If Telfer's also using Train A, you get that cross-subsidisation of costs. Good for both mines, Telfer and Havieron. And then what does all this low cost does? It drives the IRR. And what's really important as well with this low cost is we've talked earlier about that CapEx. This starter mine has carried all that CapEx of the full mine. As you expand it, as you bring in incremental ore, it only has to cover the incremental CapEx of just driving down to that new layer. It doesn't have to build another road, another power station, get down the 400 meters and set up all that in-mine infrastructure. All of that's being carried by this little starter mine, which just talks very strongly to the quality of this asset. The next slide just kind of talks about how we generate that cash flow. We obviously have development CapEx, and then we generate funds beyond that, and hopefully it gives you some sense of the scale up that we can deliver as we take it beyond this 2 million tonne pre-feasibility. And what I particularly like about this is it's self-funding. Again, tailor-made for a mid-cap. So we get in there, we establish this mine, we get down there, we generate free cash flow, and then we reinvest a lot of that free cash flow into unlocking the full value of Havieron. And this study really just gives us this line of sight as to what the metrics of Havieron can be. And the fact that we can unlock that, using these initial cash flows is a fantastic in terms of minimizing dilution to Greatland shareholders. Look, I enjoy this slide. It just sets out the way this has been planned, the mine. It's this lovely subvertical ore body, underground mining, gravity is your friend. And what's good about this is the flexibility. It highlights you've got 4 vertical mining fronts. What you want is flexibility. That lets you manage risk, lets you keep your gear productive. And why is this a sub-level open stoping? because it's this high grade, really defined boundary. So you want to minimize dilution. But also, I talked before about this southeast crescent. We continue to hit it at depth. It just seems to plunge down into the earth. We want to be able to follow it down. So you want to be able to put in your paste fill and manage the seismicity to follow this at depth. And again, on this page, we also talked about the fact that these big stopes look a little bit like a Cali. That's the Newmont mine across in the Northern Territory, Australia. That's a fantastic mine. It was one of those special mines sitting to the left of us on cost structure. That's down to about 2,200 meters, and still has fantastic cost because it's got really good ounces per vertical meter and has this same kind of large stoping under a sloth system. And of course, just to reiterate, what we're actually looking to take forward into the feasibility study is actually 50% bigger at a 3 million tonne per annum sloth assumption, which looks like it can potentially hang together if we continue to get the continuity in this southeast crescent as expected. Look, the takeaway from this slide is just, look, 9 drills running. We've got a lot of meters going into this giant deposit. It's a big area to drill out, particularly from surface. So again, getting that decline in early is going to give us drill platforms. And there's some 50,000 meters have been drilled since the cutoff for this pre-feasibility study. So remember, that was back in February. So there's been 10 months of information that we've all seen that hasn't been captured in this pre-feasibility study. Plus, there's a plan to do 90,000 meters of drilling over the next, this financial year to June 2022. So that gives you some context as to the upside that we have within the project. What we can deliver with all that information, and some of the drill intercepts that we included in the RNS talk to the quality of the new drilling campaign. The thing I love most of all about Havieron and indeed Greatland is the opportunity remains ahead of ourselves. We are still very much in the growth phase. The same reason people were buying us 12 months ago, 6 months ago, 6 weeks ago, 6 days ago is around where Havieron is headed overall. And that's what this slide talks about. We have a really good cider now on the southeast crescent. I think the cost structure there, the capex probably exceed expectations. But what we see across that broader zonation, across that northwest crescent, that corridor moving through that northern breccia where we're seeing, where we're trying to stitch together these higher grade areas and getting that corridor of high grade. And potentially most exciting as all is to have these big intercepts sitting in this whole new area, different geochem, different ore body kind of sitting or deposit sitting to the eastern flank of Havieron. Pretty exciting to have that sitting to the east of what is already a world-class ore body. So that's something that we spend a lot of time thinking about, and just talks to the quality of this asset and the quality of the growth. You don't need the eastern breccia for this to be world class, but to add that, really becomes something significant. Look, I think we'll talk about sustainability briefly, but we want to be a leader in this field, because what it does is it increases the universe of potential investors, in addition to the really strong environmental outcomes. We'd like to kind of target zero carbons within 5 years, or net carbon within 5 years of being in production. We need to engage with Newcrest around that and understand what we can do together. But I'm really confident around the way Newcrest thinks about these issues as well of sustainability. And we want to be great partners in that, because we believe in it. We want to be leaders in the field, but we also think it makes really good business sense. So I'm just going to close out the presentation in the next couple of 5 minutes, just around the portfolio itself. look, I think, we love the option value on our ground around Havieron. We're going to continue to invest in the drill bit, and indeed we've added ground here. We've significantly increased our footprint, and we'll continue to look to do that. We'll continue to look to drill there, and we currently have a rig spinning there on Scallywag. In terms of the overall portfolio, again, we want to invest in this. We want to invest in the drill bit, and we also want to be disciplined managers of our portfolio. We want to keep adding good quality assets that can compete for drilling budget with Havieron. Ernst Giles, top of that list. Really excited about getting in there. We do need to get the access agreement done with the First Nations. I've been working in that over the last 6 months, and that's progressing well. So we'd like to think we're a chance to be drilling that next year. And again, great option value, but we'll also be spending time on Panorama and Bromus in the 12 months ahead. I'm conscious of time, and I can see to the right of my screen lots of questions, which is sensational. So look, let's just say ESG remains really important to us, and a critical part of what we want to do. And we love the copper aspect of our ESG profile. No better way to invest in the EV and battery than through copper. And I did hear Sandeep say from Newcrest today, the best gold companies to invest in are those with a copper profile in them, and we certainly fit that box as well. People, I do want to just pause for a moment here. For those that know me and have known me from other other companies, I'm a huge believer in the team, in building that. We've invested in our team, and I think the capacity we've added around safety, around mining engineering, we've augmented our resource and our finance team. I think it speaks volumes to the people, the quality of people we're attracting, because of the quality of the asset we have. We've also added to the board with Paul Hallam, and we'll look to add further to the board. We really want to just build that team, because it's the team that's going to deliver our ability to understand the asset, to contribute to it, and to scrutinise it, to make sure that Havieron is developed for the benefit of Greatland shareholders. The second part of the people, I won't spend a lot of time on this, other than just to recognise an old friend there with Callum, who remains part of the Greatland family and had a tremendous contribution, but also just bring in that additional reinforcements. Stuart Masters on the JORC board, Simon Hanrahan, Ian Ritchie on for processing. We're really lucky to have that augmented capacity within our team, and again, something I've really focused upon. So with that, look, I will just close this out, but I talked about the funding process. Look, we've drawn about 20 million of that 50 million debt. That 30 million, at least ostensibly, is forecast to last us till the feasibility study scheduled for the December quarter, so around 12 months away. But we also have banks lined up around the block and we've received term sheets for debt. And these are from tier one institutions. These are from named Main Street banks, and I think today's PFS, a maiden reserve, showing that cost structure, showing the margin, is only going to further enhance their excitement about being part of it. This is a brownfield, risk development with Newcrest. It's right down the fairway for banks. They perceive it as low risk, which works really well for us. So when we talk about that remaining US 73 million of funding, there's a great opportunity to tackle that with bank debt. That's not to say we won't consider equity components as well, but bank debt certainly something we're going to understand. I've got a background in it, and we certainly understand the magic of leverage for shareholders. So look, with that, I just want to again say thank you for tuning in, but I'm keen to move across into the questions. So with that, I'll invite the moderator, Mark, to fire away.
That's great, Sean. Thank you very much indeed for updating investors this morning. Ladies and gentlemen, please do continue to submit your questions using the Q&A tab situated on the right-hand corner of your screen. But just while Sean takes a few moments to review the investor questions submitted already, I'd like to remind you that a recording of this presentation, along with a copy of the slides and the published Q&A, can be accessed via your Investor Meet Company dashboard. I'd also like to remind you that your feedback is important to the company, and immediately after this presentation has ended, we'll redirect you for the opportunity to provide your feedback in order that the company can better understand your views and expectations. Sean, I've given you absolutely no time at all, and as you quite rightly point out, there are a considerable number of questions being submitted during today's event. In addition to that, though, investors had the ability to pre-submit questions. So, firstly, if I may thank you all for taking the time to submit so many questions. But Sean, if I could start off the Q&A with these ones, which I think kind of summarise a lot of those that we received ahead of the event. First question reads as follows: why did Newcrest decide to release this PFS now and not wait to include more information about Havron?
Look, I think this is very much a stage one study. It really identifies this southeast crescent, the low cost, low capex nature of it, which I think probably may have exceeded some people's expectations. So I think that's really strong. Having said that, I talked about it before. This is the entree before the main course, so the scale of this is not huge. Why would they want to put this? Well, it makes a huge amount of sense from a mine planning. Newcrest puts around $250 million into Havron prior to Greatland and its shareholders contributing, in part through that loan agreement. So, it makes a huge amount of sense that they want to understand and confirm that that's a sensible investment. Some of you may have also noticed they've invested a further $180 million in Telfer to keep the lights on there. They don't want a gap here at Telfer. They don't want to lose those 1,200 people in situ there. And we don't want them either to lose those people. That's all part of the low risk nature of this development. So I think what does this do? It confirms that we're on the right track. It confirms the quick start of Havron was the right course to take, and it tells us we're on the right track. So, I think these things are multifactorial, but I think it gives you this lovely line of sight as to what Havron can become.
Thank you, Sean. As a long-term investor in Greatland, how does this PFS change your thinking about Havron as a tier one asset?
I think it confirms my thinking about this being a world-class asset, and a world-class asset being developed in a tier one jurisdiction. Australia is a great place to be a mining company, but Western Australia is the jewel in the crown. And then again, we're doing it with a tier one partner in Newcrest, Australia's largest miner with 35 years experience here in the Paterson, and all their infrastructure and people infrastructure to leverage upon. So what does this tell me? It tells me this is a world-class opportunity. It's a low risk, low capex, and it confirms that low capex. It confirms the low cost structure. It confirms the bigger opportunity that what we can discover here. So I think this is more affirmation for me. But perhaps, as I kind of mentioned before, that capex hurdle, that cost structure are maybe a little bit better than I was expecting, which is brilliant. It's always nice when the risk is on the downside. And again, for those that kind of follow mining companies, I think when you're converting resource into reserve and actually seeing the metal content come up, I think that also speaks volumes to the team, but also the quality of the ore body.
Thank you, Sean. I know you did touch on funding, but we did receive a number of pre-submitted questions relating to funding. Will Greatland Gold need to borrow significant amounts to fund the development of Havron, and will that be possible to obtain?
Well, look, I said before, it's a good question. Look, I think the way I look at funding is in three parts. Firstly, we have this existing facility in place, drawn about 20. We have $30 million of runway ahead of us on that, which is expected to take us to delivery of the feasibility study in the December quarter. So we've got 12 months of runway ahead of us before we expect to have to contribute to the development of Havron. So that's a lovely time frame to have ahead of us. We're already engaging with banks. So I think the question was, will we have to borrow a lot of money? well, it's always nice to be offered a lot of money from the bank. We won't want to, we want to right size our debt, but I think for banks to be able to invest in, low risk jurisdiction, high quality mine, high risk partners being developed with a brownfield development is exactly where banks want to have exposure to. So we have a lot of engagement. We've received term sheets already. We're going to be pursuing that. And what does that do? It reduces the equity requirement, if any, to move forward. So I think it's a luxurious position for us to be in. And it all talks to this CapEx profile is just tailor-made for a mid-cap. It really is set out before us magnificently.
Thank you, Sean. The final kind of pre-submitted thematic question that we had was around, and we received a number of them around your relationship with Newcrest, and really just relating, and if you can give a bit of colour to how is your relationship with Newcrest, and do you see this positive momentum moving forward?
Yeah, look, hopefully it came across in the presentation. We really respect Newcrest. We like to think that respect is mutual. Certainly the exploration teams have worked together really well. Look, I think some people have observed there's a little bit of Newcrest experience in our team, but I think that's all part of building the relationship, of having existing relationships, understanding the language, understanding the gold book standard that they approach studies in, having existing connectivity. I think all of those were done to enhance the relationship. It's an important relationship for us. We think it's moving really well. The feedback I get from Newcrest is really positive. And I don't think we could be in better hands in terms of all the experience they have in the Paterson, leveraging their Telfer infrastructure to develop it. And again, it's us, the opportunity for us is not just to sit back, but to understand it, to contribute to it, to be that peer review with Newcrest, and indeed to scrutinise it to make sure we optimise the outcome for our shareholders. And I think we do that well. I think we've got additional capacity to do that with. And again, it should give people a lot of confidence, but it's built off a relationship of strength with Newcrest.
That's great, thank you. And thank you once again to those that submitted questions ahead of today's event. And of course, we did try to address a number of those questions throughout the slides during the presentation, in addition to those that we've just asked. Sean, if we could just turn to the live Q&A, and perhaps I could start off at the top in time preference. This one came in at 9:32 from Luke. So thank you, Luke, for your question. Why are Greatland using a gold price of $1,750 as opposed to $1,500 that Newcrest use in the PFS, resulting in a lower AISC stated by Greatland than Newcrest?
Yeah, it's a good question, and it's good to clarify that. So look, where is the current spot market is how we think about that, especially with gold and copper, where you can hedge those outcomes. We've used a gold price a bit under the current spot at 1750. We've used a copper price at 9,000, which was meant to be a bit under spot, but as those following the market would know, copper price has kind of surged in the last kind of 10 days. So we're kind of well under that now. Newcrest is using a price deck which is 15-20% below market. That's a way to approach these things, but I think to understand what how the asset would perform in the current market, prices may go up, prices may go down, but certainly when I look at things corporately, we tend to focus around a spot outcome, and I think that's the right way to look at things. Equally, I think we get the best of both worlds. A lot of the mine planning here has been done on a far more conservative price deck. What does that mean? It means this asset can perform to expectations through the cycle. So a notch down or a pullback in gold or copper prices or combination isn't actually going to change the metrics of this mine, isn't going to change the performance, isn't going to change the economics of the material. So we are getting the best of both worlds there. And you're right, our assumptions are basically the same as Newcrest, other than with a slightly higher copper price. Of course, that gives us a slightly higher credit in the cash cost, which notches them down a little bit. But otherwise, we've basically used the same technical studies and platform as Newcrest, just with different macroeconomic assumptions laid over them. And we think using Underspot, a fraction conservative, but we think tells the story.
Thank you. Devshi asks, do you expect the release of the PFS to attract significant institutional investment?
Yeah, look, my background, with Northern Star, Australia's, I think, second largest gold miner, Sakari before that, out of Singapore, and Straits back, we're all multi-billion, multi-asset companies with hugely institutional investor bases. My strategy with Greatland is to maintain the strength that we've historically had with retail investors, and then augment that with institutions. I think, like most people, whether it be retail or an institution, they often don't buy on the first meeting. It's building the relationship, it's building the trust, it's delivering what you say you're going to deliver. So we've really been building those institutional relationships over the last 6 months. We've seen some institutions creeping into the registry. I think this study is only going to enhance that attractiveness. And to be honest, I've had a couple of chats with instos today, even, and I think it's been well received, and I think it positions us really strongly. So I think it's very positive, our engagement with institutional investors just now.
Thank you, Sean. Paddy G asks, which of the growth targets excites you the most? The Eastern Breccia, the NW Pod, or the external targets like Zipper, Havron North, and Mecco?
Well, that's a ripping question. Look, to some extent, I think the lowest risk target. I'll answer it in 2 parts. The lowest risk target is, or 3 parts rather. The lowest risk target is that northwest corridor, kind of bringing together these high grade areas that we're seeing, and knitting together this trend that we're seeing in that northwest corridor that brings that Breccia together. I think that's really exciting. It's going to take time to drill, but it's very positive in what we're seeing. The Eastern Breccia is just extraordinary. To find widths of 200 meters sitting in the shadow of Havron, different geochem signature, is spectacular. I can't help but be really excited about that. When you already have an ore body, and then you've got what looks like a mineralized extension of some 650, 750 meters sitting next to it. That's good fun. So looking forward to drilling that out. The option value, the banker in me always enjoys a bit of option value sitting in those proximal targets. So we do want to drill them. I think we have similar on the Scallywag tenements that sit next door, but I think all 3 of them bring different stories to the growth, and that multi-layered growth profile that we have at Havron, it all adds to why this is a world-class system.
Thank you, Sean. Stuart H, he asks, can we expect regular updates from tenements outside Havron, particularly when assays have been sent to Intertek and when visible mineralization is seen by the on-site scanners?
Look, we tend to work, we do work with Newcrest in a very cooperative way. We talked about the relationship before around effectively kind of trying to get our drill results out in a 6-weekly cycle. That's really good of Newcrest, because they typically work in a quarterly cycle. So I think, again, there's a little bit of give or take in any good relationship. Look, we do TrueScan at site, so we do get a little bit of an indication as to where drilling's going. Having said that, there's no substitute for assays. So we're always going to want to finish the assay process, finish the quality control, QA/QC procedures before we announce anything. So I think that should be the expectation. It's really important from the integrity of our process that we fully complete that before we share information with the market. And again, I think that should be giving confidence. Part of the benefit, I'd like to think Greatland would do this in any case by ourselves, but part of the benefit in being partnered with a world-class organisation like Newcrest is the quality of those processes, the quality of the risk assurance, and all that feeds into the confidence you can have in the study numbers, and why you see things like when we convert a resource into reserve with additional density of drilling, the metal content actually notching up rather than dropping down as people go, oh, our estimates overestimated that. So I see that as all the upside about the quality of the team we have at Havron.
Stephen H asks, does the statement "every drill hits mineralization" still hold true?
Yeah, yes. In a word. So yeah, look, it's this beautiful look. We shouldn't call it a pipe, or a cylinder. It's a series of nested intrusives, but it is kind of this pipe or cylinder shape. So you can kind of drill into it from a lot of different angles and still consistently hit mineralization. And that's what we're seeing. When you're punching holes into this, it's a really consistent ore body. And particularly through that southeast crescent. So yeah, look, we continue to hit mineralization, ranging from the lower end through to the spectacular plus 1,000 gram meter intercepts. But yes, we continue to hit mineralization today.
Turning to Mark S, that's gone. Let me just take the next question from Nicholas. My apologies. Are you seeing any improvements in the time it takes for the labs to assay cores?
Yes, gradual. They've invested. Our team was just out at one of the big labs that is, I think they said it was 98% commissioned now. So I think what we saw this year was, as assay times walked up to say 8 weeks from say 3 or 4, you saw the quantity of assay information or intercepts coming through in our announcements walk down, because more and more assays were held up in the labs. As that starts to walk down, I think that's going to be a gradual process, because there's a big backlog established now, but we actually might see an acceleration of intercepts coming through. I don't want to flag that's going to be the next one. This is going to take months and months to flow through. But in the same way, we saw a slowdown in the curve of results coming back, you ultimately should get the acceleration down the hill on the other side. So something to look forward to. There's been a lot of investment in those assay labs over the last 18 months, and we're going to start to see, the sector expects to start to see the benefits of that.
Thank you very much indeed, Sean. Turning to Mark S, the ore body is open at depth. Is there a limitation to the practical mining depth of the ore body, and if so, what is that depth?
Yeah, look, good question. It does depend on mining methodologies. For instance, in some of the bulks, you might be leaving larger voids, and the rock support nature and everything is different. One of the reasons we talked before about using a sloss down that southeast crescent is because it's high grade. You want to be able to chase that at depth. So this more selective mining methodology, put in the paste fill, and I've used Cali as a really good example that uses a sloss mining. They're down about 2,200 meters vertical, I understand. And I think that shows you that if you have those ounces per vertical meter, you can chase those kind of mining methodologies down at depth. So that probably gives you a pretty good insight, as I think if we think about Havron as ultimately perhaps potentially having two mining methodologies, a selective mining such as a sub-level open stope down on the southeast crescent and going deeper there, and then still a deeper mine, but not as deep on the breccia, assuming it uses a larger bulker style mining methodology.
That's great. Thank you very much indeed. Martin R, his question reads as follows: Would there need to be any modifications required to the Telfer mill to treat Havron future feed?
Yeah, look, there is that obviously, is captured by Newcrest that own the mill. But what you're going to see, the intent right now is actually to put Havron ore down train B, which is the newer of the two trains at Telfer. And the reason for that is just simply the grade. The grade coming out of Havron is very high. I think it's okay for me to say, Newcrest wouldn't mind me saying, out of the open pit, you get a much lower grade ore feed out of Telfer. So you don't want to blend them together. You want to keep those ores discrete to maximize the outcome from Havron high grade ore. So you want to capture that, particularly that high grade copper coming through. So there are some modifications being worked through. And what do we want to do? We ultimately want to optimize the recoveries of Havron gold and copper. And I like to think there's a little bit of upside risk in those recoveries as we continue to work through that as part of the cycle.
Thank you. Andrew W says, hi Sean, are you able to give your thoughts on how we compare the resource and growth you oversaw at Northern Star?
Hi Andrew. I think Northern Star was a spectacular success story and continues to be. It's a great organisation, and as was Sakari, a tremendous growth story, and Straits before that. I've been really fortunate to be involved in three stories that have all delivered 5 to 10 times multiple of invested capital. So my journey through mining's been really good, and I've been part of some fantastic teams, and I'd like to think I've contributed to some of those teams as well, all those teams. I think about the comparison to Northern Star, and it's a goodie. Our launch asset, Paulson's was the launch asset at Northern Star. Bill Beament might be on the tape here, the former chairman and CEO of Northern Star. I don't think Bill would mind me saying, Havron's, a different scale up from Paulson's. But from that, Northern Star was to able to grow, just a world-class organisation. And similarly, I think we can do that with this. We have a better starting asset. And what did we do at Northern Star? We invested in the drill bit. You don't drill, you don't find, you don't mine. That was one of our mantras there, and that's why you'll see me continue to invest in the drill bit. The discipline. I think Northern Star, we used to pride ourselves as being really good miners, really good underground miners. I think that's again, I've invested in that team. I want that same capacity here, but it all starts. You've got to be good at each stage of the mining. You've got to have the vision. You've got to invest in the drilling. You've got to be able to deliver that efficiently in a productive mine, and then you've got to be able to process it, and then you also want to be able to create the financial structures to optimize that for shareholders. So that's very much the same template we're going to be using here, and we do use here at Havron. And that's the opportunity ahead of us. That's what gets me out of bed every morning excited, is to grow the platform here at Greatland.
Thank you, Sean. Turning to Mark P's question, the presentation makes Greatland Gold look very attractive. What are the chances of a takeover, and would one be welcome?
Well, it was intended to be attractive, so that's good. But I think when I think about our share price and Havron itself, the challenge for me and for the Greatland team is that our narrative to the market is understood, well received, and that we're able to grow Greatland as Newcrest grows. Newcrest grows as Havron grows. Every day, there's 9 rigs spinning on this site, adding information, giving us better understanding of the ore body, unlocking value, giving us a better insight as to the future. So the challenge for us is to continue to grow Greatland, because if we're unsuccessful in that, at some stage the hammer will fall and someone's going to take this asset off our hands. You don't find world-class assets in world-class jurisdictions being developed on a low capex, low risk profile. Often this is a precious jewel which we're fortunate enough to own and develop. So I think of our risk as our share price risk as asymmetrical. If we're unsuccessful at asymmetrical in that, if we're unsuccessful at delivering that narrative to the market, our bear case is that Takeover comes and we get the 35, 50, 70% premium and we're taken out. I like to think the bull case is, at least a theoretically unlimited upside in the share price as we fully unlock Havron and look to leverage that platform for further financially disciplined growth. So that's the way I look at it. We are immature, we have a massive growth profile, and every company in the sector wants a growth profile, and that's all Greatland is right now.
Thank you, Sean. Just turning to Stephen H and his question, do you have a view on drill results from the Jury JV Scallywag? Prospect slide looked to have a red dot advanced prospect in addition to the one at Havron.
Oh, look, the Scallywag drilling, has a number of, I guess what I'll describe as tier one targets. We are systematically going to work through them. The team here might pull me up on this, but we try to do a lot of work with geophysics, geochem, to geophysical information and use these modern technologies in exploration to help us look undercover, to help us understand the opportunities better. Albeit, we can have anomalies with higher grade gravity, so high density gravity and magnetic anomalies that look better than Havron, but they might not carry mineralization. Another one might have a lower footprint, but actually carry just as good a mineralization. So I think exploration is a little bit of an art and science mixed together. So we've got a lot of opportunities and targets. I'm not a believer of genuinely ranking them. I think it's very hard to rank them in terms of which ones will be successful, but we've got a lot of opportunity, and the way we approach it is incredibly disciplined. We don't go in and pattern drill something and spend lots of money. We drill a hole, we understand the stratigraphy, we compare it to what we expected to have, we recalibrate, and then we decide about going back there and what that information has given us to reposition that hole where we should be looking. So it's a very iterative process. We're excited about Scallywag. We think there's some good opportunities in the portfolio, and you should have confidence that we'll continue to pursue them with vigor.
Next question is, when are we looking at updating the resources at Havron? Is it this December?
Yeah, look, we need to work through that with Newcrest. I know our teams kind of try to recycle that information regularly to get a cider on where that's going. Last year, the agreement with Newcrest is we went out in December. I think this year, I think it's that December through February period would be where you should expect to. So it's not far away, but both companies have to work on that together. But we, from a Greatland perspective, we'd love to get that out by the end of the year. Otherwise, very early in the new calendar year is our strong preference. And again, lots of meters drilled, 9 rigs spinning, and the results. If you take a moment to kind of familiarize yourself with the results across this year, there's some spectacular intercepts since the last update. So all of that gives us a lot of confidence about where an updated resource would take us.
Marcus H's question reads as follows: can you touch on the drilling next to the Artemis ground, who I believe will also be drilling shortly?
Look, they are drilling across the border from us, or across the tenement boundary from us, which is good. Again, that will give us some insights on information. And God bless. Hopefully, they're really successful. The best place to look for gold is where it's already been found. So look, they've got a campaign underway, and we'll monitor that with great interest, as we do across the Patterson. And if they are fortunate to find something that we really like the look of, hopefully we'd be first in the queue to work with them. But they're a really good organisation. They have some good ground, and I wish them every success, because their success is a really good pointer as to our success as well. So especially along that shared boundary with them. So we we'll continue to monitor that.
Sean, we are currently coming up to the hour, but if you're happy, I'll gladly throw some more questions at you. For every one question you seem to be answering, there seems to be 2 or 3 following it. So if you're okay,
Yeah.
I'll crack on with a few more questions, if that's okay.
No, look, I've got another 15 minutes if people, look, and I can see those questions flying in. So look, that I'm enjoying it. Hopefully the viewers are too. So pleased to do so.
Great, thank you. David W asks, great PFS, but why hasn't a decision to mine been announced?
Hi, David. Look, I think this gives you a lot of confidence as to where that decision is going, but technically a financial investment decision would follow the definitive feasibility study. Again, December quarter next year. I think you'll find Newcrest are sticklers for that process, but the fact that we already have a decline going down to the top of the ore body, I think Havieron becoming the mine is the worst kept secret in the industry.
Thank you very much indeed. Alan N asks, to remove ore efficiently from Havieron, would a second decline be built, and where would it be?
I think again, this talks to mining methodologies. It talks to the larger scale opportunity. When we look at this PFS, and perhaps if you look at the Southeast Crescent 3 million tonne per annum case in isolation, so that's where we think the feasibility study may go. You're going to be kind of running that on a single decline basis. Look, my rule of thumb is, with trucks, you can probably manage about 3 million tonne per annum with various overtaking bays up a decline. And I think that's a lot of the planning that the team's looking at that. So that's your single decline case, which is what we're presently working on. I think when you start looking at the bulk mine to get out more than 3 million tonnes per annum, that's where you start thinking about a second decline. Again, look, this could have shaft, it could have another decline for trucks. But if you have a look at what Newcrest does very well within their portfolio, Acadia, is they also use conveyor and dedicated conveyor declines. Smaller, cheaper, straighter, run it back towards Telfer. I think that's probably gives you an area where I'm sure Newcrest would be very confident if that's what the economics said was the most viable bulk material handling methodology. Again, studies will run this to ground in a very disciplined way, but I do like to think that there's every opportunity to put a underground conveyor into an ore body of this size and grade.
Thank you, Sean. Turning to John D. John D asks, what sort of average Crackle grades are we seeing, would you say? And what threshold would make the bulk Bercia more commercial?
Yeah, look, I think when you talk about the breccia, we tend to divide it into the general brecciated area, and then into the Crackle zone, and then into the cemented breccias. And really what that is just how brecciated, how cracked the rocks are in that. So the more cracked up it is, the more mobilized fluid, the more mineralized mobilized fluid has had a chance to go in and fill those cracks and cement them up, so to speak, with gold and copper. In the Crackle breccia, it's far less brecciated, far less cracked, so ergo it carries less mineralization. So really our drilling is targeted on that cemented breccia zones. When we talk about the eastern breccia, when we talk about that northern breccia and that high grade corridor, and even that northwest crescent and pod area, kind of we are talking about those more brecciated areas, which gives the opportunity to carry higher grade. So that's what we're targeting on the grilling. And what's really positive there is that as we drill, we're finding that the areas of the Crackle breccia are retreating as we better understand the boundaries. As we drill more, we find more pockets of this greater brecciated areas. But the cemented breccia is really just halo material. That might run at 0.2 grams. So that's not what we target. It's not really part. It's nice that you've got a little bit of mineralization there if you're taking bulk material, so you bring it in. But fundamentally, it's that it's that higher grade brecciated area, and the higher your bulk, different mining methodologies change your cutoff grades. Obviously, the more efficient, the lower cost you can, the more scale you apply to something. And if you look at something like a Cadia, which again is a Newcrest asset, the cost structure they achieve there is outstanding because of this beautiful block caving methodology. One of the great advantages that we have with Newcrest isn't just that they happen to be next door at Telfer, but they are one of the few mining companies globally, and certainly the only one in Australia, that runs both a block cave, sub-level caves, and stoping. So they've got the expertise, they have the confidence, they have the experience to deliver any of those mining methodologies and understand their application well. So that's part of the beauty of the joint venture is that expertise that we collectively bring to the table.
Sean, thank you. Let's go with a question from Devshi, who asks, can you talk us through the company's progress with regards to divesting assets where you don't see them being a tier one asset?
Yeah, look, this all comes down to the competition of capital, of scarce capital within Greatland. I quite like the properties in Tasmania. I think they've got they are reasonably attractive on some metrics, with high probabilities of mineralization. To some extent, we wouldn't like to let them go because of that. So we'd ideally probably continue to have some holding there. But having said that, the scale of them, the potential size of them as we presently envisage it, just does not compete with a Havron. That's why we like Ernst Giles, because we think it's elephant country. It can have a similar size prize in that region, so it attracts capital. The drill rigs are attracted to go there. So look, as part of being disciplined managers of our portfolio, I've flagged previously that we're assessing those Tasmanian assets, and perhaps they are the ones that we trim at this stage. But equally, we'd like to bring other opportunities in, particularly other opportunities that we think have the capacity to be Havron ilk, to have that world-class scale to them. And that's certainly what we spend a lot of time trying to identify.
Stuart H asks, will DDH1 and Mitchell Services drill through the Australian summer barring Christmas?
Yes. So at site, look, I think when you start to get into true exploration drilling with very limited camp features, as it really gets hot, and as it happens, it kind of gets hot and potentially wet out in this area of Australia during the winter. That's not great conditions for drilling. But when you've got more of a proper or I don't want to use the word proper, a more substantive camp set up as you have with Havron, which also has, again, the benefit of being supported by Telfer, well, then you can drill through the 365 days a year. So yeah, there'll be no slowdown over summer. Obviously, there's a lot of thought around safety and work practices and all those things, and both Greatland and Newcrest put a lot of focus and energy into that. We've got a lot of confidence around our joint venture partner in that area, and where there are safety opportunities to learn and work together. I think, again, it talks to the nature and the strength of the relationship. But and again, Newcrest has 35 years experience working in the Paterson region. So again, beautifully placed to understand those, how to manage those issues. But no, we'll be drilling through the year, and Havron will just continue to grow with that.
This might be a difficult question to answer, but we'll give it a go. This is from Liam R, who's from a Telegram group, who asks, what would be your drink of choice at the £1 share party?
The Look, I think we'll be popping champagne corks at the £1 share party. So that's an easy answer. Thanks, Liam.
Well, look, Sean, we are coming up to the 15 minutes extension that you very kindly gave us, and I do want to get a few closing remarks from you to really just give us a snapshot of how you see the future. But and I know that feedback's important, and I will shortly divert investors to provide you with feedback. So if I may, if I could just ask you for a few closing comments to wrap up with, and then, as I say, I'll redirect all those investors on the call to give you their thoughts and expectations.
Yeah, please do. Look, firstly, just thank you, Mark, and thank you for everyone who's tuned in. Yeah, I really enjoy the webinar. I enjoy the Q&A interaction. I'm hoping to get up into London in the new year, and hopefully have some kind of town hall opportunities to meet more of the shareholders in person. But look, I think if you're going to take something away from today, it's, look, we really, this is a stage 1 study, but Havron is ahead of us. There's a magnificent opportunity, tier 1 asset, tier 1 location, tier 1 partner, and we're delivering it at a very low capex, beautifully set up for a mid-cap, 12 months of runway that the existing debt facility provides, and this high margin development with this second lowest cost gold producer on the planet. And then we tie that all together with the forward looking opportunity to continue to invest in the drill bit, get another 90,000 meters of growth drilling, and unlock the full potential in that bulk size scale of Havron. So yeah, it's a tremendous opportunity, and the team here does a great job, and we're enjoying walking forward this.
Sean, thank you very much indeed once again for your time and for updating investors this morning. Could I please ask investors not to close this session, as I will now automatically redirect you for the opportunity to provide your feedback in order that the management team can really better understand your views and expectations. This will only take a few moments to complete, but I'm sure will be greatly valued by the company. On behalf of the management team of Greatland Gold, we'd like to thank you very much for attending today's presentation. That now concludes today's session. So good morning to you all.